Hi, everyone. On today's video podcast, we're going to be talking about the just passed big, beautiful bill and how it pertains to small business owners. So if you want to stick with me to the very end, I'm going to go over the key items that's going to affect you as a business owner from 2025 going forward. So let's get right into it and see where you can save on taxes through each of these topics. Number one is the QBI deduction. And the QBI is qualified business income. For those of you who have a pass-through entity like an S corporation or a partnership, the QBI was a deduction that you get 20% off as a deduction from qualified business income. That was potentially on the chopping block, but it's going to remain for 2025 going forward. So that 20% deduction on your net business income is still going to be deductible. So you don't have to worry about that. But there's a catch. If you're in a certain service business or your income's too high, you might phase out of the benefit. And this is the same for 2024 and years before when the QBI came into effect. So that doesn't really change. But the good news is the QBI deduction remains, so you don't have to worry about that. And you want to check with your CPA if you still qualify for the QBI deduction based on the industry that you're in, as well as the income that you're earning from that business. Number two is, this is a big one and a game changer, that's bonus depreciation. 100% bonus depreciation is back. Okay, this was gone for a few years, but now it's back and it starts retroactively to earlier this year. And that start date is January 19, 2025. Once again, 100% bonus depreciation is back on assets. So what does this mean for you? If you're planning on buying new equipment, machinery, or even software, you can fully expense it in the year you start using it. Okay, so you have to really, the important thing here is you have to put it into service. You can't just buy it, put it in a closet, and say, I'm going to use it next year. You actually got to turn it on, start using it in the current year to utilize bonus depreciation. So no more waiting. No phasing out. It's a full write-off, okay? And the big difference between this deduction and what I'm going to talk about next is that the bonus depreciation actually take you to a loss position for the year. So you can actually have a net loss for the year using bonus depreciation. The third really big tax deduction still available for business owners is the Section 179 deduction. The Section 179 deduction, it's a deduction where you can deduct up to $2.5 million, that's with an M, in qualifying asset purchases. But there is a twist. You need to have business income or profit, and the 179 deduction on certain assets cannot take you below zero, just like the bonus depreciation can. So what I just talked about, bonus depreciation, that can actually bring you down or below zero, so you don't pay any tax. But 179, you need to have business income in order to utilize it. You want to utilize the Section 179 deduction or bonus depreciation. You have to talk to your CPA and be strategic about this. The fourth really important tax deduction that sticks around with the new big, beautiful bill is the SALT workaround. That still survives. SALT stands for state and local taxes. So if you're an LLC or an S Corp in a high tax state, your business can still pay the taxes on your behalf at the entity level. And you get the deduction at the end of the level that you might have missed out on the individual level. So once again, that SALT workaround where you deduct your state income taxes on your business return still exists. Okay, that can mean actually tens of thousands of dollars in federal tax savings for you. And one of the last but really important tax deductions that we're going to go over here is the clean vehicle tax credit, and that is going to end on September 30th of this year, 2025. Once again, the EV tax credit worth up to $7,500 is going to end on September 30th of 2025. So if you're planning to upgrade your fleet to electric, you cannot wait. Okay, so by September 30th, you need to have purchased a new EV vehicle to qualify for the tax credit. This is for new as well as used EV cars. And in my next video, you're going to want to tune in because I'm going to go over the details of the EV tax credit, when it sunsets, as well as what is the credit amount for the type of vehicle, whether it's new or used. The timing is everything. So these are huge changes that you definitely want to consult your CPA about if these changes affect you and your personal tax return. Thank you for watching, and I'll see you next time. Bye.